Good morning and welcome back to Almus Market Mornings. The centerpiece of today's conversation is the ADP research data released yesterday. While in the usual times we would have had a host of data to assess the labor market's health, this time round ADP and many other private payrolls are filling the gap as the usual data got disrupted by the shutdown. The data itself indicated a weakness in the labor market, which reinforced expectations of a rate cut and sent the dollar and the yields lower. Domestically, this move lower in the dollar index has no effect on the rupee, which continued to hit an all-time low against the greenback and comfortably broke the rupees 90 mark. Good morning, JK. We comfortably traded over 90 yesterday. I think it's on everyone's mind. What's next for the rupee?
Good morning, Swaraj. Yes, I think the 90 psychological mark was, very keenly watched whether it would break. But the way it has broken and stayed above it, it is not giving comfort for people looking for correction in the dollar rupee. Because none of the conditions that are driving the rupee lower are changing. We're still having to contend with higher trade deficit, lack of capital flows. I think it's maybe stall at these levels. Yesterday, we did see it stay below 90.30, which is also a good resistance point on the technical charts. But then we are in uncharted territory. Therefore, we cannot, assume that, we are going to fall from these levels or, rise. Either way, it is, it can go either way. And looking at the conditions, I think upside looks more vulnerable for the dollar. And, the demand is still persistent. Official reaction also had been quite cool yesterday. We had some statements from the chief economic advisor as well that they're not unduly worried. That was the crux of what they've been saying. And more the delay in trade deal also, it adds to the pressure on the rupee, because that means that we will continue to deal with the higher trade deficit. Now, one more thing that has happened, is also the offshore activity on the dollar rupee increasing, and the difference between onshore and onshore points are also widening, which means offshore players could be getting long in the dollar against INR. 1 month points are traded at a high of 23, whereas in the local market it's around 17, 18. So I think with the RBI seemingly not too much interventionist in the recent days and allowing rupee to move freely, I think there is a possibility that we could see more speculative activity driving the USD INR higher. Of course, if it does become very, too much volatile, RBI can step in. However, any of such operations will be only smoothening operations unless we see a good change or positive change in the fundamentals. That's not likely. And all this is happening even as we are seeing the dollar index itself, move lower steadily in the recent days. Yesterday, of course, we had the driver from ADP jobs report, where it showed 32,000 jobs were cut in November, following revised 47,000 gain in October. Of course, the numbers are, the only numbers available to us, along with the Challenger report that we can assess for the labor market situation in the US. The BLS employment figures are not expected until late in this month. Therefore, even Fed will have only limited data to assess. However, this particular data also shows that employers are hesitant to rope in new people, and there was a broad-based decline in the employment as well. So I think it did not help the dollar yields to move higher. However, there was some relief from the ISM services sector report. We saw yesterday that the services activity continued to expand. It was 0.2% point higher than the October number at 52.6, and business activity expanded new orders were, in expansion as well. Employment index, of course, contracted, and the prices were also, price pressures were also lower, but still in a very high, level of 60, which is, it's an elevated zone for the prices. So overall, the report is seen as quite positive. The respondents were also quite positive going forward. And this is in contrast to the tepid manufacturing sector report that we saw a couple of days back. So it kind of mixed report that we saw. Today, of course, we'll also have a report on the jobless claims. The JOLTS data will be there, where job openings data will be available. And then the challenge job cuts, where last week we saw a very big cut in the jobs in the US. So these are the indications that the market will have for consuming before the Fed meeting happens next week. And of course, the dollar was lower on the basis of mainly on the basis of the fact that Kevin Hassett will most likely be the next person to take charge of the Fed after Powell's term ends. And Kevin Hassett is a candidate that is being pushed by the current administration in the US. And in fact, the indications were clearer yesterday when the Trump administration cancelled further interviews for the replacement for Powell, and market assumes that Kevin Hassett will be in charge, and the outlook is also that he could be more yielding to the government pressure for cutting rates, and maybe rates will be slashed much aggressively, which what the government wants, and that is putting the dollar on a weaker footing now. So a new basis for sell-off in the dollar. Of course, while we did close at a 7-week high for the euro, I mean, we still have to see 1.17 being broken to get a sense of a new direction or a new up move in the euro. In any case, dollar has also failed to sustain any gains beyond 100 in the dollar index. So we are now seeing the dollar yen also somewhat under pressure. The BOJ governor has indicated that could be a rate hike this month, and also the sterling is also being well supported after somewhat a positive outlook on the fiscal plans by the Starmer government. So I think overall dollar is under selling pressure. If you look at the CNY also, today the Chinese central bank has fixed the central rate at a new cycle low. And now, if you look at Chinese yuan itself, it is now comfortably trading below the key 200-day level, and that is also trading at an all-time high. Interestingly, against INR at 12.76. If you recall, INR's movements earlier were somewhat tied to the Chinese yuan prospects, and even it was being guided in that way. However, now that relation has been completely broken. Now, with Indian imports, of course, being very high with China, this probably will have either of the two effects. Either we see a drop in the imports from China, improving the trade deficit with them, or if the imports continue at a higher rate, then we could as well have an imported inflation. So Chinese yuan getting stronger, not only an indication of dollar weakness, but also is an indication that INR is also weakening with its trading partner. So overall theme, as we step in, into the last 2 days of this week's trading and ahead of RBI meeting tomorrow, is that dollar is weaker, but INR is also weaker. Thank you.
Thank you, Joke. And yes, that is the kind of narrative that's going on in the market. Dollar index, it remains weak globally. We are seeing all other currencies sort of, I wouldn't say all, but most of the currencies perform quite well against the dollar. But there are a few currencies, which includes the INR, which is sort of underperforming because we have our own challenges. There are some fundamental factors till the time that gets resolved, this pressure on rupee will exist. But as of now, it does not seem that at least the ministry is worried. The chief economic advisor and many others, they have made comments. They aren't worried about the rupee's weakness. And interestingly, one other point to note is that the offshore activity of rupee has also increased, and there's been a significant difference in premiums between the onshore and the offshore markets, indicating a lot of dollar demand. Today, we have a whole lot of data from the US, jobless claims, jolts, challenger job cuts, all of that will be looked at. And tomorrow, we, of course, have the RBI monetary policy decision. That's it from us today. Thank you for listening. We'll catch up tomorrow with a fresh round of updates.